Good morning or afternoon, everyone. My name is Zach White with the GSMA. I think we'll give it just a minute or two more to allow everyone to join before starting. Okay, I think we'll make a start. Good morning or afternoon, everyone. My name is Zach White. I'm a Senior Insights Manager with the GSMA Digital Utilities Programme, and I'll be moderating this session as we go through. To give you a quick overview, we'll begin with three presentations, from a quick one from myself introducing our work, and then I'll hand over to Marlies from Aqua to do the same, who are the co-hosts for this session. We'll then have an introductory keynote from Evelyn Holland of Systemic before turning to our panel discussion, where we'll have about half an hour before we'll turn to any questions that come from all of you. So moving first to introducing the GSMA and our work. Slide, please. For those who don't know the GSMA, we are the industry association for mobile operators and represent the interests of mobile operators worldwide. Within the GSMA, the Mobile for Development Programme, for which I work, drives innovation in digital technology, and we really work at the intersection between the mobile sector and the development world to identify and scale innovative solutions. And I think one reason the GSMA is positioned in this way is because in many low and middle income country markets, mobile is synonymous with digital, and a lot of the digital solutions are anchored in mobile services. I work with the Digital Utilities Programme, which includes water as one of the 5 focus sectors that we look at. And our programme is supported by the UK Foreign Commonwealth and Development Office. Slide, please. In terms of what we do 4 main things. We provide equity-free grants to de-risk and catalyse investment in innovative urban utility services. Alongside this, we do research and insights work that draws on, our market engagement activities as well as this innovation funding. We focus on partnership facilitation, particularly with mobile operators and around solutions that involve mobile operators. And finally, we provide technical support alongside all of this. Slide, please. So turning to focus specifically on our work in water, and I think this begins to unlock part of why we're here today, and what we want to talk about is, over the years, we've supported a good number of companies that emerge providing services, and broadly it's a course split, but there's the B2B solutions focused on those companies that seek to deliver services for water utilities and other providers, and then the business to customer companies that provide those services themselves. And I think what we've seen in the last 10 years of this innovation funding is just how quickly a lot of these companies are scaling and how services are developing. So on the B2C side, I think we all know that urban water ATM models have emerged rapidly, similarly with their counterparts in rural services. And at the core of all of those are 2 kind of central planks of the digital offering, which is mobile money and digital payments, and then connectivity for smart devices. And on the B2B side, we've also seen increasingly the utilities are digitalizing and a quite an astonishing rate. And we actually have another session on Thursday on that, so I won't talk too much about it. Slide, please. So I think what we're really interested in, and this is where the work of the MFD Foundation focuses, is where these solutions come in to provide, to fill some of the service gaps. And we've seen and documented with evidence, you know, that they really can make a difference to some of the biggest challenges we face. Pay-as-you-go services, combining digital payments and IoT devices, and making services more affordable. We all know that, you know, geographical information systems are helping, and increasingly big data are helping utilities and service providers plan, monitoring, sensors, are giving utilities better visibility of their network, as well as ensuring that services are safe. Slide, please. And just to make this slightly more real for the water sector, is that when we begin to map these services onto, these solutions onto utility frameworks, it becomes obvious how they link the different elements of water service delivery there, and at the different tiers of utility operations, from planning through to connecting customers and service providers. Slide, please. On my final slide, I'm going to talk a little bit about some of our recent research, which was in Kenya, looking at the experience of 4 water utilities digitalizing. It's a little bit of a plug, but it also acts as a little bit of a foundation for this session, because a lot of our speakers and a lot of the context in which we'll be discussing innovative finance is the Kenyan water sector. So we started this work because there really is an enormous gap looking at the extent to which documenting utilities' experience of digitalization, and we wanted to take a very close look at how utilities have digitalized their operations. We found, you know, broadly there were 3 stages. That in the early stages, it was focusing on some of those quick wins, payments, and digitalizing specific functions like meter reading and billing. In the kind of middle phase, looking back over the decade, there was more of a focus on customer relationships and beginning to collect data with GIS and piloting smart meters. We saw a very interesting trend recently, which is a shift to focus more on digital systems, including enterprise resource planning, and deploying some of more of those advanced solutions. I'd encourage everyone to read the paper. I think it's very interesting. But what it leads us to in terms of this discussion is that one of the most interesting aspects identified in the research was the emergence of some of these innovative financing partnerships, and also some of the commercial banks' offerings to water utilities in the sector. And that's very much what we're going to be focusing on today. So that's it for my brief introduction to the GSMA and some of our work. I'm now going to hand over to our co-hosts and introduce Marlies from Aqua for All. She is Aqua for All's Regional Program Manager in East Africa. She currently leads the 5-year program, which works with entrepreneurial and innovative initiatives with multiple financial institutions, with a focus on bridging the gap, the service and financing gap in water and sanitation. So Marlies, I'll hand over to you to introduce Aqua for All's work.
Yes, hello, good morning or good afternoon, everybody. Thanks, Zach, for the introduction. Yes, my name is Marlies. I'm with Aqua for All, and Aqua for All is a Dutch-based not-for-profit organization. And like Zach said in the introduction, we bridge the service and finance gap in water and sanitation through smart granting. So we take a 3-legged approach, so to speak, but it's based on supporting entrepreneurship in water and sanitation. We're looking at innovations in the sector, which could be anything from social innovations, financial innovations, or technical innovations. We are scaling up enterprises that have passed the proof of concept but are scaling. And at the same time, we are working closely with financiers and investors to mobilize private capital into the sector. Of course, we work with partners in an enabling environment and with multiple stakeholders to create that sector change that we need to see as we are getting closer to 2030. Thank you. Yes, so catalyzing investments in water and sanitation, that's basically the core of what we try to do. We try to leverage on both public and private funds in the sector. I think the key entry point is looking at risks in the sector and what can we do, what role should we play to de-risk those investments in whatever way possible. We can take innovative finance approaches, blended finance approaches, whatever is needed in the level of entry points that we take to see how we can structure our support. And ultimately, of course, we're looking at water and sanitation enterprises that serve the households that are not being served yet at the moment. Next slide, please. Yeah, so this is, again, the 3 pillars that we are working on. On the left side, you see that we are working with innovations in the sector that are just initiating their ideas towards proof of concept. And then I think from those, we take the ones that are going to scale. It's actually pipeline development to prepare them for further uptake in the sector, either public or private financiers. And you see that those initiatives that are scaling can find barriers to scale, which we try to remove, not by ourselves, by working with others, remove those barriers to scale and make them investment ready and release them to the next stage, which is actually, other financiers picking up on those initiatives. We need that, of course, and we all know that we need other kinds of capital to come into the sector to close the gaps that we currently see, because we need to get to that sustainable scale. Next slide, please. I think I'd like to give a few examples of digital innovations that Aqua for All is working in 3 different pillars, because we see currently, over the last 10 years, I would say that this trend is, of course, increasing and the opportunities are increasing. So in the innovation space, we are looking at piloting any kind of new solutions in the sector. Already mentioned by Zach, the smart meters, the sensors, the dashboards, the pay-go models, etc. Anything that can actually transform the sector potentially, but still needs that proof of concept. We've been working for a long time with new technologies, prepaid technologies, smart asset management tools, dashboards, those kind of things. You find them in our portfolio, and we come across GSMA and the ones that they support, I would say, at the same time. Then in the scaling element, we do see that we need to increase the uptake of solutions that show potential, but still need a long route for making them business as usual. I think in general, we see in the water and sanitation space a little bit of hesitance to embrace these solutions, especially in the areas where we are working in the geographies. So how can we comfort service providers, financiers to actually embrace this at a larger scale? And an example is the lease finance through smart technology that we are involved in, which is, I would say, an alternative solution to the traditional way of financing these kind of solutions in the sector. And then I think the element that Zach also mentioned is an interesting one. How do we connect all of that to the ones that have to invest in it, either from business to consumer or business to business angle? And we see a lot of interest in digital solutions as a de-risker, reducing the risk through the data and technology that is available, that is functional, and offers lots of opportunities to overcome the current barriers in the sector. For instance, introducing revenue-based financing through technology, moving away from the traditional, collateral-based financing, and can that be replaced by these kind of solutions, opening up new markets also for financial institutions looking for that. At the same time, digital solutions, they optimize the revenue streams through the technologies, and I would say, last but not least, the transparency that's being created through those digital solutions is a very important element of a de-risker, I would say. You can see almost 24/7 how the revenues are flowing, what the performance of systems is, and I think for financiers that is equally a very important element to take into account. So all in all, I would say we are really excited to talk today about the trends and opportunities that we see emerging, that we are supporting, and that need to be available at scale to accelerate access to water and sanitation, and actually take that big step to crowd in those private sector, those private investors, and make that finance available for the sector. Thank you very much. Over to you, Zach.
Thank you, Marlies. Brilliant. So we have one more presentation before we turn to our excellent panel, and that's from Evelyn Holland. Evelyn is a director at Systemic, a systems change company based in their Jakarta office. She's an expert on natural resources and blended finance mechanisms, and she recently authored a report on mobilizing capital for the water sector for the Blended Finance Task Force. So she'll give us a quick scene-setting presentation that I think can hope to locate our discussion around private capital and commercial capital entering the sector into its broader context. So over to you, Evelyn, and thank you for joining us.
Thanks so much, Zach, for the introduction. It's an honor to speak today and, as Zach said, give a brief introduction to the water financing landscape, including the challenges and opportunities. So if we move to the first slide, please. As this group is probably aware, the funding need for water and wash in low income and low middle income countries greatly outsizes the current spend. We estimate that there's a $200 billion annual funding gap, which, if this were filled, could unlock more than $500 billion worth of benefits, from new markets unlocked to avoided hidden cost of poor wash management. Next slide, please. When we talk about water investment, it's worth looking at the whole system, as it includes a wide range of projects, assets, activities with very different characteristics. So starting from the right top-hand side, we have industry-linked big water assets, large-scale projects linked to clear revenue streams and payer. We then have municipal big water assets, which likely have a dispersed number of users and payers. We then have small-scale solutions, which, as their name suggests, are small and decentralized. We have the nature-based solutions, such as catchment restoration or regenerative agriculture, which in places will have outsized positive water impact, as well as a wide range of other climate benefits. And lastly, there's water governance, which needs to ensure an overarching, supportive, enabling environment. All of these assets have a very important role to play. And if we can move to the next slide, please. However, only some of them meet interested investors' criteria in terms of scale and risk return. And it's this mismatch where technology and innovation can play a very important role, whether that's innovation within the water system, changing how the system works with new business models, or if it's where digital is changing how finance works for traditional markets, e.g. by de-risking, as Marlies mentioned earlier. Next slide, please. So there are many challenges that face financing water, and we bucket those into three main challenges. The first is monetization challenges, such as the underpricing of water or perceived or real affordability constraints, as well as underdeveloped markets for sanitation services and others. There's then a bucket of cost-related risks from the long amortization periods for large projects, the high project development costs and high transaction costs for smaller projects, poor watershed management, which may be creating externalized costs, as well as general credit, liquidity, and currency risks for investors. And finally, there's governance risks, which could create a poor enabling environment for investors and may scare off investment. However, as shown by this slide, which gives kind of an overview of a load of case studies included in our report, there are strategies to overcome this, whether that's in smart project design and solution design, or in how financial mechanisms are structured. And although the majority shared here focus a little bit more on the financial structuring, the sector is also ripe for business model innovation through technology or otherwise, which can create new opportunities for financial flows. Companies like CityTaps, which I'm excited we'll hear speak later in this session, or Feelwell Ceramics, are developing profitable business models to provide for previously underserved communities. Next and last slide, please. So from all of this, our main takeaway was that almost all successful solutions require a high degree of collaboration between public, private, and philanthropic players, which is great to see. Which is why it's great to see at this panel that wide range represented. We need providers of concessional capital to use it catalytically, whether donors in providing grants and technical assistance to cover upfront project development, or NDBs and DFIs providing guarantees, or philanthropies using their capital to innovate and scale new technologies and business models. We also need to make sure we have the right enabling environment. National governments must make water a priority and communicate that clearly and consistently. And finally, we need entrepreneurs, incubators, project developers, and private sector players to develop and fund feasible solutions and bankable projects, leveraging technology and digitalisation where it can help overcome key challenges. Thanks very much. Back to you, Zach.
Thanks, Evelyn, and thanks for that. So at this point, we're now going to turn to our panel. We are running perfectly to time, which is good news because it leaves plenty of time for the Q&A. So we have about 20 minutes to half an hour where I'll be putting some questions to the panel. If that throws up anything from the audience, please do put the questions in the chat because we'll be looking at those closely for the remaining 15 minutes. I'm excited for this panel because I think we have a range of speakers you don't usually see at water-focused events, including two commercial financiers from the Kenyan sector, Safaricom as an MNO and a technology and service provider, and then CityTaps as an innovator, bringing all of that together. So I'll briefly introduce the panel now. Before turning to some of the questions we have. So we have Peter Muthinga, who is a senior manager in the partnerships program of National Bank Kenya. Last September, National Bank, with support from Aqua for All, announced the launch of a $5 billion, roughly $45 million fund for SMEs working in the Kenyan water sector. The fund is aimed at two market segments. One is capital loans for entrepreneurs, these are slightly smaller, and two larger infrastructure loans targeted to water utilities. So welcome, Peter, very good to have you with us. Second, we have Isaac Kabutha, who is a IoT specialist at Safaricom. Safaricom are Kenya's biggest mobile operator, and for those that don't know, we're the company that gave birth to the innovation of mobile money a little over a decade ago. They're a critical partner to many water sector innovators and have also worked on piloting innovative solutions in water directly. Third, we have Gregoire Landa, who is CEO of CityTaps, a venture he founded in 2015. CityTaps have developed a solution that bridges the gap between water utilities and the urban poor. It's a pay-go service that comprises of a smart water meter and accompanying billing software. City Taps have worked across several African markets, including Kenya, and have recently been involved in innovative funding partnerships that have unlocked commercial finance for utilities with low creditworthiness. And finally, we have Kennedy Murita, who is a member of SC Ventures. SC Ventures is a specialized business unit within Standard Chartered Bank that provides a platform to promote innovation, invest in disruptive financial technologies, and explore alternative business models. SC Ventures have recently been examining the water sector and are looking at developing some innovative financial products and services tailored to the sector. So an excellent panel, especially for discussing private capital. Welcome everyone. And to kick things off, I might start with you, Piton, and National Bank's work. So I wanted to ask about the journey, or I was wondering if you could outline the journey of National Bank that took you to the development of the Water Fund, and what sort of projects you've been looking at funding, and how you see the sector.
Thank you, Zach, and I'm glad to present in this conference. My name is Peter Mutiga. I work at National Bank. The journey started last year when we decided that we need to create some impact with a viable commercial viability. And we thought water sector is a key area that affects all other sectors. And we decided now this is a sector that we need to invest in. And we put some good funding, some good strategies, some good partners so that we can be able to support the sector.
That's great. And maybe just to take it a little bit further, since the launch in September last year, how have things been developing in terms of the investments you're looking at making or have begun making?
We have had some good traction since we launched in September. We have created some good pipeline. We have supported both corporates and MSMEs. We have also onboarded some good partners, including some of the panelists here, set it up Aqua for all. And we also work with Safaricom, and we have been able to create some impact around the public utilities and also in the MSMEs. So far, we have already done some good disbursements, some support, and we'll be able to see by end of September to achieve, we are on course to achieve the key goals that we had set by end of the September 2022.
That's great. And maybe just a final kind of follow-on question before I move to Isaac, which is when you're looking at the water sector compared to other sectors, how do you look at the risk profile, and where do you see differences that are specific to the water sector, and where do you face similar challenges to making other investments?
The water sector is one of the most risky sectors especially in Kenya, because it's a public-owned institutions. We have had some areas that were not well developed, so most of the water companies have not fully developed in terms of governance, in terms of infrastructure, and also they lack collateral. So the key challenges has been how to de-risk this sector, how to get affordable financing for this sector, and also how to implement projects, how to monitor implementation of the key projects for the last mile connectivity. But so far, we have been able to achieve this through getting on board some de-risking or what we can call guarantors on board for our program. We have also had some technical assistance from Aqua for all, and we have also worked with Water Equity to get some debt capital to improve our cash flows for lending to this sector.
Great. Thank you for that introduction. Isaac, I might turn to you next. So I think, with mobile operators, one of the issues is, how you're seen in the sector. There are multiple roles that you play, fundamentally as a provider of, traditional services that mobile operators provide. But increasingly that role is shifting in terms of, potentially being seen as a technology provider and providing services, or even a financier in some of these arrangements. So I was wondering, could you outline how Safaricom are approaching partnerships in the water sector, how you see yourself and how you see the offer you have in deploying these solutions?
Yeah, thank you. Thank you, Zach. So I think from a point of Safaricom, Safaricom is an MNO in Kenya, for those who may not know. And as you mentioned rightly, we are big in mobile money payments, and also as a technology company, we have been making that transition slowly from a telco to a technology company. In terms of our role in the water sector, I mean, sometimes it's hard to relate a telco and the water sector, but we see ourselves as an enabler. Yeah, we enable through digitization certain aspects that then improve the water sector operations. Key being mobile money payments, and in this market, at least, we support nearly all the water service providers in terms of collections. And that's been a key enabler in ensuring that even financing and the de-risking of financing is made possible, because then through mobile money, which collects nearly about 80% of all the funds coming from water companies, there is able to, that you can be able to ring fence that finance the collections. But secondly, also is digitization. So we see ourselves as a digitization partner for all these companies, enterprises in this market, water companies and water service providers included. How we approach partnerships is working with the key working with specific companies that have specific, or let me put it like this, technology and innovations that then can be able to come together. And the water service providers are looking for billing solutions, they're looking for smart infrastructure, they're looking for payment gateways and kind of things. Safari plays a central role bringing us to realize that digitization journey for the water service providers.
Yeah, thanks. I think that's really interesting. I was wondering, could you bring it to life a bit in terms of some of the partnerships you've explored, but also maybe where the water and other utility sector fit in terms of your broader strategy and your future strategy in terms of the opportunities that you see and how you're approaching the sector?
Yeah, so maybe walk you through some of the use cases we have worked on. We started way back in 2018 actively doing work in the water sector. We came with a startup called Upepo, who I think a couple of years back was a finalist in the Stockholm Water Week conference. And in this case, we were providing smart metering infrastructure with narrowband IoT, being the low power network to power things, to power meters spread across the country. And then that morphed out into, fine, we can provide the network and the technical infrastructure, but then what about the financing to enable this? Because we need scale, we need to be able to bring this kind of infrastructure at a scale to realize the value. And we started working with Standard Chartered Ventures way back in 2019 and did a pilot in one of the water companies here, one of the large water companies, which was successful and gave us a lot of insight in terms of how we should approach this kind of projects. One, that financing was very key from the onset, and also then being able to work with a technology provider to provide the infrastructure. Fast forward, we have done a couple other deployments with water companies spread across the country, but more on a pilot basis to prove the concept, because it's still a bit far-fetched on how you can use smart metering infrastructure spread across the country and different locations to be able to realize fast management. Mobile money, we have always been providing this service for a lot of water companies. So we really didn't see it as a separate offering. We much the same way we do collections for other enterprises is what we have done for water. But from a point of partnerships, I think coming off the last 3 years of trialing low power network, we have enabled a lot of technology providers to bring in instrumentation that would run off GSM network and not have to run private networks to support this infrastructure, but also have formed partnerships with financing institutions as Standard Chartered Ventures and National Bank here to support the water service providers to be able to acquire this infrastructure and technology. Beauty about this market is that we managed to leapfrog a lot of the complexities that earlier organizations tried to do with smart metering. You can say maybe in 10 years back, where radio frequency was predominantly the smart metering connectivity mode. So we are coming in at a phase where there's not so much of AMR rather, automatic meter reading, and we are coming in a phase where the technology has really improved and water companies are now able to get in this infrastructure, which is tried and proven, and to deliver value out of it. So it's been predominantly working with tech funds and also working with financiers to realize the adoption.
Thanks, Isaac. Just an addition for those who might not know, narrowband IoT is a specialized network that operates on a lower radio frequency and is ideally suited to things like smart meters that have small data packets that are sent infrequently. And Safaricom's network in Kenya is one of the first launches in African countries, but we expect that, in the next 10 years, as IoT devices become more widespread, we're going to see more of these networks that have that specialized offer. Isaac, one final question in this kind of opening set, which is you kind of mentioned the learning that you've taken from all of these pilots and projects. I wondered, what are the sort of challenges that you've been running into, and after this period of learning, any reflections you have on shaping your entry into the sector and how you're thinking about overcoming some of the challenges coming out of this piloting phase.
Yeah, I think one has been being able to craft winning partnerships. Yeah. So a lot of these projects start off as very small scale kind of deployment, which then morph up into projects. And so right from the onset, I think what we've noticed is we need to craft winning partnerships, well thought out partnerships from the onset, so that we can be able to build on momentum from past pilots and projects that we have done. So one of those things that we have struggled with is we, in a lot of other projects, have had to work with different partners, because in one engagement, probably the scope was very limited, and as the project moves, then we've had to change partners. So that's, I think, one key element. And secondly is looking at it end to end. So not just getting the technology to work, but ensuring that you're thinking of adoption well in hand. So how do you ensure adoption? What scale enables you to realize a good value for the customer? So as you engage, you need to be able to do some capacity planning with the customer, or the water service provider in this case, and the financiers, and all partners you're dealing with. So I think it's been really small things. Initially, it's really trial and error, but as we move along, it's just putting a well thought out plan prior to starting this kind of engagements. But it's been good learnings anyway.
Thanks, Isaac. I think we'll come back with any questions we have from the chat. But thanks for those opening remarks. Kennedy, I may turn to you next, and the work of Standard Chartered Ventures, or SC Ventures. I think it will be unfamiliar to a lot of people on this call. So I wonder if you could start by maybe explaining, as a specialized business unit, what you look at, and then maybe some of your involvement in the water sector and the why of why SC Ventures is considering this sector and how you're looking at it.
All right, thank you. As mentioned earlier by previous presenters, the area of financing in the water sector has been a challenge to the industry. And that is because of quite some time now, we've not been able to curate the proper kind of commercial credit to the sector. And this issue came to the fore with us at Standard Chartered when a lot of our clients, who were in the water industry, basically found products unsuitable for some of their needs. And we found that the area is dominated by NGOs and multilateral funding rather than commercial credit. And we found this to be kind of strange because, water is so fundamental to human existence. And the fact that it cannot be commercialized, or there is no commercial model that allows us to engage in the sector was a challenge to us that created the problem statement in terms of how do we resolve that funding gap. I think earlier presenter mentioned that there's almost $1 trillion gap in funding to the sector. And so we felt that this is a problem that really needs to be resolved. And with the introduction of a lot of technology, you mentioned Safaricom, the narrowband network, mobile telephony that has resolved financial challenges or financial inclusion in the emerging market. We believe that technology is now available for us to be able to basically extend the use of technology to resolve some of the challenges in the sector. And so driven by some of our clients through co-creation, what we call the co-creation sessions, we wanted to basically delve into this space. So we actually put capital funding for POC funding. Some of it already mentioned by my colleague from Safaricom, in trying to see how do we develop the commercial model for this sector. And we found that a lot of the stakeholders in the sector, have different set of information requirements that are not met, and that the data around that sector is not organized, and that there are technology tools starting from an infrastructure solution based using IoT to financial and commercial solutions based on digital verification, identity verification, being able to identify the participants in the sector and making them bankable. The structures and platforms can be built in that regard that can address some of the challenges and enable commercial credit to flow into the sector, so that which is more sustainable as a funding source rather than just NGO financing. So these are the platforms that we're looking at building and partnering with all the members on the panel and the industry to which they belong, to try and create that platform that can enable financing to be directed to the sector.
Thanks, Kennedy. I'm going to pick up on one aspect of what you said, because I think it cuts to the core, which is the risk profile of the sector. And you mentioned in that some of the things that begin to change the dial on it, the data and the risk partner, but the data that utilities hold, and we've also heard from Marlies, the visibility of the flow of funds. I was wondering if you could elaborate a bit on how you're looking at the risk within the water sector, and what you think would change the risk profile in terms of getting the sector ready for larger investments or just more commercial capital.
Basically, when you look at, we're taking a platform approach or a network system approach, rather than just looking at one particular player. We are looking at developing a platform, or actually incorporating a platform and funding a platform that will be of use to all the participants on the table. Therefore, because as you will note, in the emerging markets, a lot of the structure and infrastructure related to water is very disjointed, and sometimes the information that is required by one unit is not available by another. And also the management teams that are made, the companies or the water service providers and processors who are managing water facilities may not have the first-class, world-class skill sets or the world-class technology to be able to improve the performance of their organization such that they become bankable or become profitable. And so we are looking at building a platform which enables international players, for instance, where a lot of some of these learnings have already been established, where there's non-revenue water has been reduced to very, very low levels, and making it accessible to areas where it's needed. Narrowband network, as you mentioned earlier, now enables us to deploy some of these industry solutions that are in the developed market and align them and link them to the water providers and water processors within the country. Also, governments that need to derive policy data, that need to drive the policy around water management, will also be able to derive the data and have a more reliable source of data to make policy already regarding that area and monitor the performance. A key sector that is not sometimes ignored are the vendors and the suppliers in the sector within the country, so that where if you can identify challenges in the sector or with a certain water provider, but then the persons with the unit, the companies that are going to, or the SMEs that are going to support and provide maintenance services also need financing. And they need financing they need to be able to know where to get the appropriate equipment. So connectivity in the ecosystem. So in short, we're taking an ecosystem approach that will provide touch points with each of the stakeholders such that they will then be able to provide financing. A unique aspect of us, although we're a Standard Chartered Bank, we're not just looking at providing credit or credit scoring to the participants in this ecosystem just for our own use. We're actually going to democratize that. So we're using technology features like blockchain, which enables data portability. When you codify the data around a participant in the ecosystem and you make it available to different financing partners, depending on their risk profile and their risk appetite, we'll be able to fit the credit appropriate to each sector of the economy. Because what tends to happen now is that because the entire sector is considered risky, you will find that the good players or good performers are given a punitive rate and therefore unable to access credit at the level of management that they're able to do. And this drives away capital from the sector. So we believe that by properly credit scoring each participant in the sector, we'll be able to identify the level of credit to which they are eligible, and then making that available to multiple institutions, funders, NGOs, governments, will then be able to be able to drive capital to the different sectors or different aspects of the economy at the right price, and therefore start bridging that funding gap in the sector. That is our overall strategy in terms of how we want to look at this space.
Thanks so much, Kennedy. I think enormously interesting to have your perspective on, what some of the solutions might be, and also the fact that you need to look at the different partners within the ecosystem, but as a whole in terms of the vendors, utilities, other providers. I'm going to turn now to Gregoire, because I think it segues nicely as an innovative provider themselves. Gregoire, so turning to you, I was wondering if you could briefly discuss your journey and the solution that you offer. But as an opening kind of question, since 2015, 7 years ago, how you've seen the funding available and the type of funding partnership or financing partnerships you've entered, how they've evolved and changed.
Okay, so that's really two different questions, but thank you for the opportunity to talk about what CityTaps has done and hopes to continue to do. Very shortly, we've gone from having wooden boxes in Niger that were supported. There were prototypes supported by GSMA in the very beginning, to having a fully industrial level solution that includes a pay-as-you-go meter, integration with mobile money payments, and the digital payment tracking and managing system, so that people can pay as they go for water, which is to say exactly like a lot of people pay for their phone. You top up, you spend your credit, and when you have no more credit, you are turned off, and then you can top up again conveniently from your phone, from anywhere, for any amount, and at any time of the day or night that is convenient for you, including remotely if you're traveling to another side of the country, etc. One of the unique aspects of our solution is that it allows people to repay their debts on a daily micropayment basis, which is to say that if, let's say Kennedy owes 1,000 Kenyan shillings to or 10,000 Kenyan shillings to the utility, he can pay 10 shillings for 1,000 days. He can pay 20 shillings for 500 days. Whatever happens to be convenient for his family and for the utility, whatever agreement they can come up with, and Python can have a different repayment plan, which of course allows the utility to recover the accounts receivable that hobble their balance sheets today and result in their appearing to be non-credit worthy or to be unattractive to commercial finance up until this day. As a side note, we also offer a non-revenue water management solution that is crafted and designed in steps so that it is manageable and palatable and take in able, if I can say that. That's not really English, but you'll forgive me, by water utilities in developing countries. It's not a solution that's been developed for Copenhagen or Munich and then just plopped onto Bomet or Malindi or Kisumu in Kenya and say, here, good luck with that, because that usually doesn't work very well. So we have a solution that works from the ground up and helps utilities address their problems in a logical and coherent manner as and when they improve their performance. So that's the little bit about City Taps. I want to acknowledge the amazing help that GSMA has given to us. This segs into the funding part. They were among the first ones to support us, and the truly innovative nature of their financing from the time DFID in what was project appropriate sizing. At the time, it was £300,000. It was the right number for a hardware company. You see a lot of people funding $50,000 projects, a lot of people who want to spend $2, $3, $4, $5, $10 million, but you rarely see anybody in the middle, in the soft middle. And that is incredibly important to foster the development of technology solutions, particularly in the hardware sector where it's not all digital. The water sector is a wet, gritty sector where you have to deal with the hardware. And it's all very well to want to build platforms and but in the end, someone has to build the actual sensor. The sensor has to be IP68, it has to be waterproof, it has to work in very adverse conditions, has to work in the blazing sun, has to work in saline environments, it has to work under the sand winds of Niger. And let me tell you, it is no joke creating these systems, and very few people have these systems because a lot of the solutions are developed for European, Chinese, or Turkish markets where they'll be conveniently installed inside buildings and they will experience none of the harshness of developing country environments, including in Kenya, where thankfully the weather is actually pretty gentle. So it's all very well to want to build an all software solution, but in the end, you got to have pipes, you got to have pumps, you got to have meters, you got to have all these things that actually make the system work. And those things cost money. And so funding is essential, and appropriate size funding is essential. And for a long time, about 7 years, we have been faced with the hand-wringing of the financial community playing what a friend of mine calls the left-handed blue-eyed Canadian thing. It's also the Goldilocks thing where, oh, the project is too small. Oh, the project is too that. Oh, I want it in this region. Oh, I want it in that region. Oh, it has to be just so. It has to be just this. And so you're sitting there going, okay, well, I've got a project that, it's a worthwhile project. It's going to bring water to people. It's going to help this utility in these circumstances. I could try to wedge it into your box, right? Or you could just make your box just a little bit bigger. And so having fought that battle stupidly, I'll admit, stupidly, assuming that the financial institutions and the funders and the financiers would see that they need to adapt to the needs of their clients, and realizing that that was not going to happen, right? That the financial industry, by and large, is interested in meeting its own criteria. And this is, I'm sorry to be, if I appear rude, but this is the experience of the entrepreneur trying to serve his clients, right? The financial industry says you have to be like so, and if you're not like so, well then we'll invest in somebody else. So you're sitting here with your thing that's not like so, it's like so, right? So what did we do? We decided that we were able to address some of the issues that the financial industry was, and I use it in a very vague, loose term, right? And you see, I'm waving my hand, so it's not an exact science. So what did we do? We said, okay, one of the problems that the utilities are facing is that they're not credit worthy. Nobody wants to lend to them. because they're afraid that they're not going to see their money back. Okay, we may agree, we may disagree, it doesn't matter. Okay, so what we're going to do is we're going to try to find a way to address that problem. And I'm going to give you the end of the story before I tell the story. It worked, right? We've managed to turn utilities that nobody wanted to lend to into utilities that the financial industry, and I'm proud to say Python and the NBK team in particular, are willing to invest in. And the way that we've done this is that we have used technology, which is really the key thing with this talk, to reduce the risks posed by these non-creditworthy entities. Entities for whom it's very difficult to provide collateral in the classical sense for any number of regulatory environment, for whom it's very hard to fit in that box, right? And the credit committees are sitting there wanting to tick that box. So what do? You say, I'm going to take your cash flows from your customers, I'm going to route them digitally so that none of them can evaporate into a safe account, an escrow-like account, from which the financier can be paid with absolute seniority. And that's what we've done. The customers make payments with M-Pesa, thank you, Safaricom. The money goes into a bank account on which the financier has first right of withdrawal, and then the balance is paid back to the utility, so that the money does no longer transit through the books of the utility, which we can agree, not very attractive to the average financial investor, commercial investor. So to sidestep this whole problem, we've said, okay, the money goes here into this special account. You can get your money, and then you can give the rest back to the utility. And that is revolutionary. We are the only ones who are capable of doing this. And we believe that it is the very first step in showing that utilities can be, as we say in the US, good for the money, right? That if you lend them money, you will see it back. Now, it can be used to finance our solution, the pay-as-you-go solution. But to us, that's only the first step, right? Because once I've characterized that these, say, 10,000 customers are generating $10 of revenue per day, or per month, I'm sorry, per month. Once I've paid back the original solution, the meters themselves, I can re-borrow on this cash flow, which is characterized, digital, secure, and goes into this escrow account to buy the cars, the treatment plants, the paper clips, the computers, everything that I need to run my water utility, and that I don't currently have access to credit to buy. So we believe that this funding gap can be addressed as long as the risk posed by the water utilities to the commercial financiers can be reduced. And we believe that we have done that. And we have data to prove it to anyone who would like to have a side conversation about it.
Thanks, Gregoire. There's three themes or two themes I'd like to pick up from what you said. I'll ask a follow-on question, but to give the rest of the panel a heads up, Kennedy and Python, I'd shortly like to come to you on revenue share models, and particularly, digital escrow accounts, and that is something that is new and potentially, the cleanest or the clearest version of digitally enabled finance, where you have an asset that collects data, that collects the money, and it can be managed separately. And Isaac, I'd also like to hear about your view of being the payments provider in that situation, or perhaps a different provider in these revenue-based models. The second theme, which Kennedy and Python, I'm going to come to you with particularly, is something that Gregoire raised about hardware, and particularly, from a financier perspective, where hardware risk comes in the sector, and how it's tough for utilities, but also, anyone else involved in these partnerships to assess the quality of hardware when you're picking between quite fine differences on, the many smart meters available. Gregoire, I myself have a little follow-up question. Before I do, I'd like to invite everyone to submit questions, and I didn't make this clear in the start. So the chat in the Zoom window is disabled for participants, but if you're able to switch to the web page from which you joined on the Seaweed platform, there is a chat box in there. It would be brilliant to have some questions from the panel here on some of the topics or the questions that you may have for the panel, and some of the themes that I'm hearing. So from Isaac, as a large, as a large player, Safaricom are a technology provider. Some of the big challenges are the right partner and the right projects and the right fit, and some of the right sizing coming in there. From Kennedy on some of the questions of the need for data and the need for sector-wide data as opposed to simply project by project, and that changing the whole risk profile to allow better identification of particularly credit worthy utilities. From Piton, any related to all of their work as a financier who are making investments in the sector. I think, among many other low and middle income country markets, MBK's water fund stands out as kind of remarkable, and an example of the capital cut, the type of commercial capital that the water sector's long talked about but rarely seen. And then Gregoire in relation to his experience and that of City Taps. So anyway, some possible prompts there for any questions that may come, and I'll turn to them in a second. But Kennedy, Piton, and Isaac, before turning to you, Gregoire, I have a follow-up question, which is, I think what you outlined excellently takes us to the point where we are now, where you have a key, you have a solution ready to go. It's turnkey. You've got the technology, you've got the platform, you've got the partnership model sorted. Other than, financiers turning up for that, I was wondering what are some of the kind of ongoing or possible changes in the regulatory or institutional frameworks, or the kind of financing landscape within the markets that you work that would begin to shift the dial for City Taps?
So the notion of pay-as-you-go for water remains slightly murky in many people's mind. There is a combination and a confusion between smart meters, prepaid meters, and pay-as-you-go meters. A lot of people will shorthand prepaid and pay-go meters as just smart meters, which they can be or need not be. I mean, a pay-as-you-go meter has to be a smart meter, but there are two different things, one of which has to do with collecting cash, and the other one has to do with communication. And there are many prepaid meters that are not smart meters. There's lots and lots of smart meters that don't handle payment at the meter level, that instead will help the utility generate invoices on a postpaid basis, and don't allow any interaction with the customer, meaning there's no way to turn off the valve or anything like that, turn off the flow. So I think we still have quite a bit of education, evangelizing to do on that, and it's hard to know where the right level of because I have been beating that drum for many years now, and I still find people that I have talked to over the years, people who I consider to be very smart and incredibly dedicated to their work, who simply don't seem to get the difference between the things. So I think the onus is on me to do a better job of explaining what it is that we're doing and how it's different from another person's solution. I think one of the key things you talked about as well, so that's important, this understanding the distinction, and that's a lot of education that needs to happen both from organization like WASREB and organizations like WASPA in Kenya, since we're focused on Kenya here, and organizations like Aqua, the African Water Association, etc. Then in terms of the regulatory environment, making it clear that paying as you go or prepaying for water is acceptable, and giving clear lines that say that a third party can collect revenue on behalf of the utility. That's something that's legal in Kenya, but may or may not be as easy to do in other jurisdictions. Therefore, nullifying the whole, escrow account, or requiring the escrow account to be a double signature account, which of course is more complicated. So it's and less safe for the commercial investor. So that's something that's very important as well. And then the communication to the general population, and I think that needs to come from the government, but also from the utilities themselves, about the need to pay for water service in order to have water service at home. And this is particularly true of wealthy people who find it that they can sidestep or can get out of paying their bills, and therefore are in fact accounting for the large majority of utilities accounts receivable, or the government itself owing the vast majority of the accounts receivable to the water utilities. So ensuring that money, which is the lifeblood of service, can flow in the opposite direction of water is really essential. And so there are, as I said, there's a few regulatory changes that need to be played, but the most sort of institutional change that needs to happen is that the government institutions need to pay the water utilities. And so we're happy to provide technology that will smooth that out, that will help that, etc. But there needs to be a political will to do that. And that's not something that CityTaps has, unfortunately, or NBK or Safaricom, unless you guys have reaches that we don't know about, or Standard Chartered really has any sort of say-so about. It's very complicated to affect those changes. And it's not a Kenyan problem, it's a global problem throughout the world and throughout developing countries in particular. Now, on the matter of the quality of the hardware, I want to say something. What is, if you're driving a Maserati on an Italian highway, you're probably doing okay. But if you're driving it, somewhere in the back roads of Kenya, it's probably not going to work very well. You're probably going to end up in a ditch. So unless you're a world-class rally driver. So not only is it complicated to know whether or not you've got a Maserati. I know nothing about cars, by the way, guys. So I excuse me if I've picked, not such a great car, but think of it, fancy car, something really fancy and great that goes fast. If you've got an actual gem, that's one thing. But if you've got a gem that works great in that environment and is going to fail in this environment, that can be very difficult to know, especially if you're not from the industry. And even if you are from the industry, if you're not from that subgroup of people who know a lot about, let's say, water meters or water pumps or whatever it is that whatever gem you're trying to assess, I would be very hard pressed to give any opinion to anyone about which kind of water pump they should buy for, or for their specific environment. I know which ones are the quote unquote Maseratis of the market, but I don't know if they would work in a Kenyan environment. And of course, those guys that are selling those water pumps, they all think that theirs is the best. So you can't really trust them, right? Can you? So
go. Sorry to interrupt. I'm conscious of time.
This is very important. In this way, those of us who are willing to go in and be paid only when the solution actually works are providing an added level of security and safety and risk reduction to the people that are financing and to the people that are buying. And of course, this is what CityTaps does. We get paid when the solution provides value for everyone. And that, to anybody involved, should be proof that not only are we selling you a boat, we actually believe the boat will sail because we're getting in the boat with you.
No, I think that's a really interesting element of where the hardware meets the revenue model under.
Sorry, that was a bit long, but
No, it's all right. No, but with 10 minutes remaining, I want to turn to the rest of the panel. Kennedy, maybe starting with you and then turning to Piton with opportunities to respond. So interested in this question of you know, some of the revenue share models and where that may or may not fit within your work and how you look at those. And then also this question of where hardware fits in terms of the risk profile of the solutions you may look at. So Kennedy, over to you, and anything else you want to respond to that the panel have brought up.
Yeah, thanks. I'll stick to these 2 points. One, the hardware and the revenue model. Let me start with the hardware first, because actually it drives the revenue model. As I said, we're looking at this from a platform perspective, and we believe that this is a data play. As I said earlier, the problem is so vast that, you know, just one type of solution is not going to serve everybody's needs, because where the different countries are at different levels of development. And as I said in my presentation earlier, is that we're trying to fit the right credit for the right customer at whatever point they are, meeting them at the point of need. Now, so the platform we're looking at is very agnostic with regards to the platform, the hardware that is deployed for the IoT basis, because there are some water processors that are using manual platforms or manual data points, and they don't have the capacity at that particular point in time to convert into a much more sexy or Maserati platform. And so what we're looking at, there are solutions in the market where, one, you can actually take a picture of your meter at a certain point in time and then relay that data through your phone. So the person collecting the data doesn't actually copy it onto a piece of paper and then take it back, because that's where fraud comes in and inaccurate meter reading takes place. You can actually take a picture, and using location services, since we're looking about technology, the phone can actually knows the location at which the picture is being taken off the manual meter, and then that gets fed into a platform. Then you can move on to digitizing manual platform by putting devices which are basically cheaper than buying totally new meters, and those can also now be now can start transmitting data. So you can convert a manual meter into transmitting data. Now the quality of data coming in will actually be inferior to a proper meter that's connected through a SIM card through a narrowband network. But we are providing the platform whereby we meet you at your point of need, get your data based on your current infrastructure, and then relate to a platform. Now, therefore, the platform is hardware agnostic, and this is the point I want to make. We're looking at a hardware agnostic platform, which therefore, regardless of what meters you have in place, how can we digitize the process around your infrastructure and leverage that data? Because the second point then is, once we're able to digitize that, then we'll be able to assess your credit rating appropriately and start bringing you to the attention of key stakeholders, whether it's the regulator or it's the financial institution, and you can start putting your infrastructure improvements needs onto the platform for you to just generating finance to improve your hardware. And so there are various ways of financing the hardware. First of all, you can actually do outright purchase. So there are some water service providers in relatively wealthier neighborhoods where they can actually have a model where they are able to collect enough revenues from their community and buy new meters. And so that's one aspect in which we're looking at financing. There are others that don't have the capital outlay immediately, but there's a record of payment for the meters or for the water services over a period of time, and therefore a lease model would be appropriate. And those will be structured in partnership with various institutions, including Standard Chartered Bank. And then there are those that can't afford either lease payments, but can afford a subscription. And this can be combined together with blended financing structures that we discussed earlier, in terms of how can we make people pay what they can afford to contribute to the water sector, but you can also get funding from other sources to complement that funding. So the issue of hardware, we are looking at building an agnostic platform. We will not predetermine or determine what kind of platform we use. We will look at whatever platforms are being used, whatever hardware is being purchased. The initial point is, can we digitize that data? And how can we digitize it? And how can we have telemetry from that to a platform? so that we can provide visibility. Because one of the areas in which mobile money has enabled people, has enabled financial inclusion, is providing visibility. We now know how much money a vendor or a cabbage seller or vegetable seller on the street spends or collects every single day. That was not possible. We're looking at industrializing that capability now for a water industry. And we've done this in other industries. So we're actually pivoting the strategy. We've done this in the agriculture sector. We're looking at doing this in the health sector. And so these are structures where we're now building those models around different users and enabling them access those services that they previously would not have been. So if you want to call it, you would say, inclusion in the water industry, where a lot of people, if you look at Africa, currently, like in Kenya, the coverage is around 60% receiving piped water, and that's being generous. In other countries, it's much, much worse. So how do you include people who need water, but don't have access to water? And the other areas of getting financing to support the hardware is looking at, once you digitize and you can identify the beneficiaries of this service, you can start looking at sustainability bonds, because there are always those the sectors of the emerging markets where people cannot afford, in the refugee camps, in outside the main city. There's water is needed both for sustenance and for environmental issues, but you're not able to monitor and track water usage for those particular areas. And so companies like CityTaps would actually be an ideal candidate for us, because what would happen is that those deploying CityTaps solution would actually automatically get rated much, much better. Because first of all, the viability and the record and the track record of those payments would be visible. And then people who might not know about CityTaps would then get to know about CityTaps. And they would say, what is the track record? What's the credit rating? Is everything that Greg is claiming about CityTaps actually happening? And that will be validated digitally. And you can make that, democratize that information and make it available not only to NBK, and I can say that to my colleague from NBK, because also not only for Standard Chartered, but for Equity Bank, for other banks that may not have made that investment or done that research, will become visible. And what does happen? It means that CityTaps can now get the equipment at a cheaper price and therefore be able to share it. Now, the revenue, okay, just one last point.
Thank you.
Okay, I'll just stop there. But the other revenues, when escrow accounting, sharing the revenues, collecting in advance, and then giving, as Greg had already explained, those are visible structures. Performance-based contracting, whereby we target how much money are we going to save by implementing an IoT solution and sharing that, and then consultancy, providing data, providing information as regarding the efficacy of any platform, and then sharing that with the client.
Thanks very much, Kennedy. Obviously, so much to say, so much that we're running out of time. Piton, I want to turn to you next, and I'd ask you to keep it to just a minute or two so that we can finish on time. There's an additional question as well. So apart from those that are on the table to be discussed, is one on your experience with lending to public water utilities. So yeah, a minute or two, please. Over to you.
Thank you, Zach. I promise to take just 3, 4, 5 minutes. Yes, I've seen a question about whether we have been able to lend to public utilities, and this is for sure we have been able to lend together with Greg. With CityTaps, we have been able to work with Bomet Water, first phase. We want to do a second and third phase. We have been able to consider other big public utilities like Kisumu, Murang'a, and others that are on course for security perfection for lending in the next few days. We have had challenges, of course, because of the record keeping. We have had challenges because of inefficiencies in collections. We have challenges in project implementations, and working with the partners, we are able to counter this. Back to your earlier questions about cash flows, about revenue share. LBK purely lends to these public utilities based on cash flows. The first assignment or the first requirement for the public utility to access funds from NBK is to first of all open a collection account. That collection account is integrated with the bank payment systems and all the channels, including mobile, cards, online. And after we see or observe 1 month's repayments or collections, we are able now to define how we are able to give you a debt and be able to pay through that escrow account, as mentioned by Kennedy. We're also looking at how we can be able to operate that escrow account in a percentage basis from each and every meter. For example, like Isaac, you're able to know how much Isaac from Safaricom spends on a monthly basis on water. In future 2-3 months, I'm able to reach Isaac to be able to pay water in good time. So I improve the efficiency of the water utility. Secondly, on the hardware, we are able to do smart meters as a lease program. As Kennedy also mentioned about it, we also able to do CapEx financing based on the initial cash flow lending that, as I said, and working with partners to de-risk this sector, we are able to not really look at cash flows at 100%, but maybe at about 50%. And we are also able to manage the companies, improve the efficiency through the closure of those losses, especially on the water loss management, non-revenue water management, and through improved cash flows, we are able to improve the water utilities. I believe those integrations are the key things that NBK have been able to do. We have been able to do integration with about 7 water utilities, and all those we are able now to make decisions through the data we collect on how we can be able to fund them, either for last mile connectivity, either for new water treatment plants, or even for digital solutions like smart meters.
Thank you so much, Biton. Before giving a quick wrap up, Isaac, I'd like to turn to you. So Kennedy and Biton both put at the center of their kind of piece on this the data that's collected and cite on the revenues and the flows and data on customers. And that, of course, rests on mobile money in a lot of cases for these unbanked customers. I wondered, in these new and innovative financing arrangements, using digital escrow accounts, using all of the capabilities you have, where you see yourself as a partner in that. And also if you could give everyone on the call a little bit of an insight into the processes that are required to set these up, if anyone, wants to understand that better, as well as, of course, anything you want to respond to.
Yeah, 2 things. So one, I think I started my presentation by saying we're a key enabler in a lot of these digitization efforts. And so as you can see, mobile money is a key enabler in ensuring that you can de-risk the financing. And at least the adoption in this market is quite good on mobile money. I think the risk comes in other markets where you would want to replicate an almost similar model, but the adoption of mobile money is not as good. So I think it's a key point to highlight. But also when it comes to the communication that is required to get these devices, because a lot of this is pegged on smart devices, on IoT devices. So we're working also to provide and make sure that companies like City Taps don't have to put in networks in where they're putting this infrastructure. They can rely on our networks. There's some work we need to do. We are actually just working on a commercial rollout of narrowband IoT, which then should be able to ensure that there's wider adoption across different vast areas. So we see ourselves as an enabler, but beyond that also for the water service providers is important that they consider partnerships with MNOs, not just in Kenya, but also in other markets, to be able to realize some of these business outcomes. So partnerships with MNOs enable them to ensure that mobile money integrations are done, and also from a communication perspective. I think the last thing you mentioned is, I'll get back to you, Greg. Last thing you mentioned is then how do you see that the continued partnership in the water sector is to enable the water companies, one, digitize. So once they can be able to put in this infrastructure, there's a lot more that needs to be done. Cybersecurity, data analytics, and the water service providers also require these kind of capabilities to be able to improve their operations. And that is also something that we are supporting them on.
That's
Greg,
great.
you had your hand up. Yeah.
But
Yes,
Greg,
it was about the MNOs. One of the problems.
Sorry to interrupt. It must be quick because we're going to get cut off very shortly.
One of the problems we face is that utilities want small projects to start with because they want to bite. They want to make sure that technology works for all the reasons we've already discussed. But the MNOs don't like to do integration with mobile money for small projects. And in many countries, there aren't the open APIs that Safaricom has. So you're dealing with a 500-meter project in somewhere in DRC. And obviously the MNO is like, why should I do any work for you? Why should I help you integrate into this? And it's a very difficult thing. In this way, Kenya is very lucky. But it's a problem in other countries. This integration with mobile money is no snap of the fingers.
No, thanks. And it's very true and something we're acutely aware of at the GSMA, and we try and support open and easier integrations. So do reach out if you have questions on those. Right, and I must wrap up, and I think I'll say thank you very much first to Evelyn. Evelyn, there's also a specific question for you in the chat. I don't know if you have the opportunity to reply to that later. And Greg, there's also a specific one for you in the platform as well. I think it's been a really interesting session, and interesting to hear the differences in perspectives across everyone who's here in terms of what needs to come together to deploy a lot of these solutions and a lot of this capital. Kennedy, a lot of what I was hearing for you was around data and the emphasis on that, something supported by Python, and how we get that data, which relies in a large part on what's passing through the MNO systems, and Isaac, that changing position of MNOs as potential partners, a tech provider and a provider of these data that comes through. But also what I'm hearing from everyone is that there's a real question on right-sizing these arrangements and partnerships, and the appetite from the financing side to develop these tailored instruments. But the fact that it does rely on these foundations of getting the project right so that it can then be matched with the instrument and needing the information on those. And then Greg, I think from City Taps, that's just a brilliant worked example of, well, not a worked example, a living example of how to do this and deliver it in a way that works for water utilities and works for their customers. So it's been brilliant to be here, and thank you everyone for joining. If you've got any follow-up questions, do you put them in the chat, or if you'd like to reach out, do reach to us there. And with that, I must close and say thank you to everyone, and goodbye from me.
Thank you. Goodbye.
Thank you and goodbye.
Thanks. Goodbye.